Okay, shifting focus from one earnings to the other, let's go across and cut into the press conference of SBI, where Chairman C.S. Setty is currently speaking to the media.
Invite our esteemed Chairman, Shri Challa Srinivasulu Setty sir, to address the media and present a comprehensive overview of SBI's financial performance for Q2 financial year 26. Over to you, Chairman sir.
Thank you. Good afternoon, ladies and gentlemen. Thank you for taking time to join this press meet today, post-announcement of Q2 FY26 results of the bank. At the outset, I would like to thank all of our customers, employees, shareholders, and regulators for their continued trust and support. We remain committed to supporting India's growth story while maintaining sustainable value for the bank. The results for Q2 FY26 demonstrate our healthy growth across business segments, robustness of financial numbers and asset quality, reflecting the strength of our franchise and the trust of our customers. I will first start with a brief description of the present global and domestic economic scenario and will then discuss bank's performance. The global economic outlook for 2025 presents a picture of modest but uneven recovery. The IMF's World Economic Outlook, October 2025, projects world GDP growth at 3.2% and 3.1% in 2026, reflecting steady but subdued momentum amid persistent structural challenges. Regarding inflation, though it has broadly moderated across most economies, the pace of disinflation remains slow. Against this global backdrop, India's macroeconomic outlook remains one of cautious optimism, underpinned by robust domestic demand and easing inflationary pressures. The RBI projects real GDP growth at around 6.8% for FY26 and 6.6% for FY27. Growth is being supported by strong investment activity, recovery in rural consumption, and buoyancy in services and manufacturing. The GST 2.0 reforms are expected to boost private consumption and domestic demand. On banking front, scheduled commercial banks' credit growth is slowly picking up and grew by 11.5% year-on-year. Last year, it was again at the same level for the fortnight ended 17th October 2025. While deposit growth remains sluggish at 9.5%, which was 11.7% last year. Going forward, we expect demand for credit to continue in the second half of the financial year. By looking at the trend, deposits and credit growth of scheduled commercial banks may remain in the range of 11 to 12% during FY26. However, risks persist from volatile global commodity markets and potential spillovers from trade disruptions. Overall, India's near-term outlook is strong, with macroeconomic stability providing space for sustained medium-term growth. Coming to SBI, the results for Q2 FY26 reflect the bank's consistent financial performance for the quarter, driven by healthy growth in SME, agriculture, and retail advances, improvement in asset quality, and strong operating profit. These advantages stem from our institutionalized framework, maintaining prudent risk management practices, digital initiatives which continue to gain traction. I'm happy to share that our total business has crossed 100 trillion rupees for the first time, and this shows the customers' trust in us. In fact, I would like to say that 100 trillion does not sound great. It should be 100 lakh crore rupees. Then only it sounds heavy, right? And the deposit growth, in terms of the performance, the total deposits have grown by 9.27% year-on-year and crossed 55 trillion, is currently for 55.92 trillion. Term deposits have grown by 9.91%. Our current account deposits have witnessed a robust growth by 17.9% year-on-year, and CASA deposits have grown by 8.06% year-on-year, with CASA ratio at 39.63%, an improvement of 27 basis points over the previous quarter. Bank's current account deposits growth has continued to remain strong during the year, despite competitive market environment. We have taken several steps to strengthen our liability franchise. Our foreign offices deposits have grown well at 11.76% on year-on-year basis.